I'm Steve McHenry. In another video, we examine structuring your business as a sole trader and partnership. In this video, we're going to examine company and trusts. This topic is reasonably complex and it's almost impossible to provide detailed advice on suitable business structures without a clear understanding of your personal and business circumstances. The reality is your choice of structure will often be compromised based on the importance of a number of issues such as asset protection, tax minimisation, or other taxation considerations. So let's look at a company structure. A company is a separate legal entity distinct from its shareholders who own the company. Companies are governed by the corporations law, which is administered by ASIC. There are different types of companies, but the most common is a company limited by shares. They provide a form of asset protection with limited liability, so the personal assets of the individual shareholders are separated from the debts of the company. Companies need to lodge an annual tax return and the company profits is taxed at a flat rate, which is currently 30%. A trust is quite different to a company. A trust is not a separate legal entity like a company, but appoints a trustee who is required to undertake all obligations and transactions on behalf of the trust. The trustee's role carries a legal liability for the activities undertaken, so trustees are often companies set up to limit the liability. There are two main types of trusts. A discretionary trust is where the trustee has the discretion on how the trust income is distributed each year to the beneficiaries. A trustee doesn't have to make distributions in any particular proportion. This income splitting can provide tax benefits, and a trust also provides a mechanism to pass family-owned assets to future generations. The second type of trust is a unit trust, which is a form of fixed trust whereby each beneficiary, being a unit holder, is entitled to trust income and trust property in the proportion to the number of units owned. A trust must lodge a tax return but doesn't pay tax, as the tax will be paid by beneficiaries in their own right. So there's a brief summary of how companies and trusts work. In closing, if you're looking at starting your own business or want a review of your existing structures, we urge you to contact us. We look forward to working with you.